sounds good. Thank you, Martin, for taking the time to chat with us. And I always talk about initially where we met, and I think we met. If correct me if I'm wrong, did we meet at a must have been a conference or a webinar or no, it was a seminar. It was prior to COVID. I think it was obviously about real estate investment.
It was, I think it was, going back 2016, maybe around then. And I think it was Julie Broad in one of her seminars.
Yeah,
Yeah.
yeah, yeah, yeah,
It was the
yes,
first
yes,
time we
exactly,
met. Yeah.
exactly. Yeah, yeah. Sounds good. Sounds good. So my memory serves me well. Exactly. So it was that was awesome. So let's jump into to what is it you do for those who may not know you. Jump into who you are.
Great. Well, first of all, thank you for having me on your show. Looking forward to spending the next little while with you and chatting. My background is in real estate investment, but prior to that, I spent a good 20 years in the corporate world, working in corporate marketing. I've worked for companies such as Kraft, Nestle, Coke in both Canada and in Australia. And then I left all of that and then went full time to real estate investment. And today, basically, my time is spent between we have a brokerage here in Vaughan, working with residential clients, as well as how I met you is at heart, I'm a real estate investor. I started out buying single family homes, converting them to duplexes, slowly moving up into multifamily, and working with new and intermediate investors to either get into real estate investment or scale their portfolio to move up and into larger assets or utilizing their current assets to make better use of them.
That's a mouthful. That's amazing. That's quite. So you is this we're talking like easily 10 years or so full time.
Yes, yeah. If I look back now, it's been a while. Yeah, about almost 10 years now.
And no regrets for jumping that corporate from the corporate world into
No. I At the beginning, it's always going to be a risk. You know, you're when you first jump out, you're trying to match your income, what you're making from the corporate world, and when you go on doing something entrepreneurial like this, you're not going to get that right away.
yeah.
And of course, you always plan for that. So I planned for that up front, and I think within 6 months or a year, it wasn't looking back. And the reason I did it for myself was I loved my corporate job. It was great. Like I had great friends, great relationships, and great business contacts. But for me, it came down to my family. My why is essentially my family. I have three young girls at home, and no matter how many times I got promoted at work, I got more responsibility. My hours probably went up, and probably the biggest one is my travel. I was traveling all the time, and I wasn't home enough. And no matter if I looked in the future 20 years, I didn't see that changing in terms of my work-life balance. So I needed to find something that, number one, get me financially stable and even increase what I was making in the corporate world and give me back my time, because time, obviously, I can't get back no matter what I do. So, and real estate investment was that thing. And I probably took a good 2 to 3 years. I always had the bug within it, but 2 to 3 years to really educate myself, and then planning out my transition from the corporate world. First, seeing that there's something financially stable there, and then within a year, seeing that, hey, this is something that for sure has legs, and I have not looked back since. So it's been great.
Oh, that's awesome. I love the story because it's true. Yeah. I mean, time is so precious. That's really well. And with children, you want to spend time with them now than when they're, a lot older when, 16, 17.
Mhm.
It's not gonna be the same. So when did you become a realtor then? Because you're a realtor now. At what point in the journey did you say, I want to become a realtor?
I'd say that was pretty early on,
Okay.
within the first several months. I When I first started and went and jumped into the entrepreneurial space, I basically refinanced my home and had some to purchase homes, and I left some as a nest egg in terms of having some sort of income, at least for the first 2 years. So I had an income nest egg, I'd say, for about 2 years. But very early on, I said I needed some way to make money, and being a realtor was one of those things I can just complement or supplement. Given that I was buying investment properties already, I was seeing, like any other investor, I just got my license to help my own deals, but then it
Mhm.
kind of evolved and morphed into a business in itself, working with investors that we have two types of investing people can do with us. They can invest with us, or let them, if they have the time and the interest and the aptitude to do it themselves, then we let them do it themselves, and we just help them along the way. And being a realtor allows us to help them along that journey, but not necessarily own any of the equity in their property, but see them go on their way and then help them in the process.
That's great. And helping others. That's definitely where we add value. And I think that's very important. You also, let's just jump into it. It's the Vaughn Investment Club. I think you started this with a few other realtors from your brokerage, and now it's a full-fledged club. Can you tell us more about that?
Sure, sure. Yeah, we started that in January of 2023. So just coming off right when the market started to change, actually.
Oh
Uh,
yeah, yeah. So
and
it's been about a
yeah, it
year or
was.
so.
And it's yeah, I started with Sandy McKay, Chris Chocote. We are leadership in the brokerage that we have here, but it's not affiliated with the brokerage. We're all investors at heart. And I think look at the way you and I met. We met in a room as in a seminar.
Yeah.
And myself and Sandy, we met going back 10 or 11 years now in a networking club. And that was kind of, we go back to our roots is we just kept in touch. We didn't do any business together for at least 8 or 9 years. And then in the last 2 or 3 years started to do business together and get into business together, have the brokerage together. Um, and then I'd say having this forum it's a nonprofit club. We do it to basically have people network and join together, and it gives us the ability to stay within the market as well. And we it's not about us investing and trying to gain on it. I'm providing a forum for people to have connections themselves. And every new real estate investor that we meet always has some sort of pitfall or hurdle or something that stops them and from
There's
taking
always
action.
obstacles along the way. Always.
Always it
Always.
happens. And
Yeah.
I've seen it time and time again that something happens to get in their way. It could be a hurdle that if they knew about investing and they had the right resources in place, that hurdle is not a mountain. That hurdle could be one
Mm.
week of something that you need to get through, and you still have the vast majority of the life of this asset to benefit from. But fear drives in.
Oh yeah.
Usually comes in, and there may be a for sale sign. Hey, want to get out of this investment, even though it still may be a very viable investment. So that's what we want to get into the new investors is saying, hey, there is life here, even though it may seem doom and gloom. And it's kind of like the age old saying, when you're an entrepreneur, it's not a straight line to success. You're going to go ups and downs, there's
Yeah.
peaks and valleys. Um, but knowing and understanding those peaks and valleys, that when for lack of a better term, shit hits the fan, you know exactly what to do. And that's kind
Exactly.
of what we want to provide is because something's always going to happen, and hopefully you have the resources in place, and networking and meetup groups were our place for that.
I remember it reminded me of a story several years ago, about 10 years ago. I had this accountant, and I told him about real estate, and he's like, "No, no, I did that once. It didn't work." And I'm like, "What happened?" He goes, had a horrible story along with it. I was like, "Oh, sorry to hear about that, but that's just one thing. There's always setbacks here and there." He goes, "No, no, never, never again." And he was confirmed. And obviously, he probably lacked the network, or at least the support group that he didn't have. So the Vaughn Investment Club, or is it Vaughn Investors Club? What's it? Is it for beginners? Who's it for? What's it guided towards? Who's the ideal audience?
Sure. The main reason we launched it, we saw a vacancy within the market right now. We used to run investment clubs in the past as well, but when COVID hit, a lot of those kind of dropped off and there wasn't
Yeah.
many in there. That was one of the reasons. Excuse me. The second reason was we made most of our wealth in real estate, but along that way on our path, we found other ways to invest as well. So it's not just about real estate. Real estate is probably the vast majority of what we do, but it's not the only way that someone needs to invest. And we have the mantra of you don't need to change the way you're thinking or your goals and your vision. There's so many options within real estate that you can find a solution to tailor what you're looking for and tailor your goals. So we have real estate investment. We look at stock options trading, life
Yes.
insurance, other things that you can have an asset base and still utilize in your lifetime, but ultimately leave a legacy and build wealth for your future as well.
I think that's amazing. I think you touched upon something that is very important because recently I started a mastermind group, and we all have this vision, and it's solving, as you say, trying to solve how to get there to that vision of wealth creation and all that.
Mhm.
What kind of speakers do you get? Like, so you're talking about not only real estate, but what kind of what kind of speakers do you usually get in this group?
Sure. Specifically within real estate, we usually pick a topic. Real estate is a very broad subject.
Yeah.
So if you're a real estate investor, there could be many deviates that you have to go down there. So we had just this year alone, we've had multifamily, we have had short-term rentals, We're going to be having one on understanding the lending landscape. The lending landscape is a big one in itself. You can probably have a meetup every few months just on that.
It
Just
changes, yeah.
the changing interest
All
rates.
this,
How does that change in terms of lenders? What does that do if you're buying with CMHC, without CMHC? The path you're going to have if you have one property versus 6 properties. So the lending landscape is probably one of the biggest ones that I learned going in. But
is that presented by a mortgage broker or a financial advisor? Like
that'd be
who comes
a
in?
mortgage broker. And then if we did something on insurance, we'd bring in an insurance person. If it's something outside of real estate, we bring in someone that is an expert within that field. For example,
Mhm.
stocks or stock options. But within real estate, it could be all those contractors. It could be putting in secondary suites. Our next one coming up in a couple of weeks is on development. So it could be severing land,
Cool.
or it could be building upon existing structures to add density as well.
What do most people get out of this, out of the meetups, or what's the big takeaways that you hear from the people show up? Because I think you were telling me there's a fair amount of people. There's members and there's non-members, but there's a lot of what do they usually get out of it? Typically, what do you hear from the people that do show up?
Right, yeah. And basically the two big things that people get out of it is number one is a networking, which is what we already
Yes.
talked about, and then getting a chance to learn and meet and share ideas together. But from a speaker perspective, sorry, they're looking to get like kind of what I did. You're going to come in there, and if you're brand new to the subject, you're probably going to get a vast amount of information, like sipping from a fire hose and getting a ton of information. But if you
Yeah, I've been there.
are
I've been there.
kind
Yeah.
of like a new investor, you're always going to get some nugget. That what we try to
Yeah.
do is give them some nugget that they can take action on the next day. So if it's understanding a new way of lending, or understanding a new way of qualifying if they're self-employed, if it's in the mortgage lending space, or they recently changed the rules in Hamilton, one of the areas we look to invest in for density. You know, it used to be just allowing to put a
Mhm.
secondary suite, and just last year they changed that to move up to potentially on one lot you can put 4 units. So it's a matter of giving them the information and tools that they need that they can take action on relatively quickly. And that's the main goal that we have for them.
I think that's amazing because it's if you look back at any great success, usually people come in early on in order to tap into that. And I remember specifically with duplex conversions. And it came in 2016, but it only the full fledge of it came afterwards, maybe 3 years later, where a lot more municipalities were involved in it, but also a lot of investors were involved in it. Before that, there were some people that were keen on it, and it wasn't necessarily mentioned. Now we're in the newer phase where it's Bill 23, and we're talking about 3 units per lot and number of bedrooms. So, are you seeing more people jump into coach houses and ADUs, additional dwelling units?
They are there, it is still fairly new, and there are
Yep.
still a few hurdles to get past on that. But if you can do something within the existing unit and break that down, and say if you're breaking down the basement and have a secondary unit and it used to be just allowable 2 units, you're putting 1 unit down there. But if you have a good footprint, you could potentially fit 2 units in the basement, and that'd give
Yeah.
you 3 on the outside. With then a detached accessory dwelling unit, that's going to be a much bigger investment. It's not just renovating the inside of the home. You may have utilities, things you need to bring into the backyard.
Mhm.
Plus, insurance is probably one of the biggest ones. Is you need to insure that secondary dwelling. So, is the payback going to be there? And are you going to get the increase in the valuation? Because as an investor, you never want to have your money sitting. So you want to refinance those funds ASAP after you do it. So understanding logistics around that, and sometimes depending on the areas that you're in, it may not make sense to put that coach house in there because you
Yeah.
don't have
Are,
yeah, sorry, go
are,
ahead.
are banks on board with it? Because take banks. I mean, obviously, there's provincial that instigate this onto municipalities, and municipalities are kind of forced in order to combat the housing crisis. But are banks on board with the financing aspect of things? Because
And
when I saw the duplex conversions, banks were delayed as well. Took a while.
it did take a couple of years for sure. It took a while, and not just in terms of valuing the valuation or the increase in home value, but also the rents. So as you always want to look to get qualified with the income that property generates. And if they're not looking at the rent that you're getting in the basement unit, you obviously get a lower valuation, and then it's going to be harder for you to qualify if you own that home.
What's the
We've
point?
all
And
faced that.
refinancing, pulling the money out,
Correct.
rotating the capital, as you mentioned, of course. So are they on board at the moment in 2024, early on?
So for the accessory, if you're having something on the outside, they're pretty much on board for everything internal. And the great
Mhm.
thing is if you're refinancing or someone's purchasing that home, they do look at that next unit and they look at the rent associated with that. With the outside, it depends on the lender. So not all lenders are on side yet. But that is changing. I anticipate that's going to be very, very similar to what we had within secondary units.
Yeah.
But I wouldn't say 100% they're all on board. But for sure, it's on the right path, and we're going to have much easier lending. But I don't think it's 100% exact same as qualifying for either a single family home or just duplex.
Okay. And when do you meet this club meeting?
We meet once a month. So we have once a month. We have a networking and a speaker, and then we also have what's called a quick start to real estate investment that happens once a month as well. And that's more of a learning training seminar for brand new individuals or brand new people that want to get to real estate investment. And then the purpose of that webinar, it's free, is just to understand, number one, is real estate investment something that interests them? And then number two, if it is, then what type of investor are they? Are they an active investor? They want to be actively participating in it, or do they want to be a passive investor? They may have a full-time job or other needs in their time, and they're making their funds elsewhere. They just want to invest. They can treat real estate investments similar to they do in the stock market and just invest alongside us, or invest alongside somebody else who is going to be the real estate investment expert, and they can invest basically from their own home, very similar to the would stock.
So what does an active investor look like?
An active investor looks like, sorry, just thanks for the last question. We do have additional meetups as well. We do property tours, we do other webinars, we do social mixers as well. So all to encourage that networking aspect. But physically, we usually have that once a month, sometimes up to twice a month, that physical. Or in the summertime, we usually have the property tours and we meet much more than that.
And the property tours are on the weekends?
Sorry?
The property tours on the weekends, or when
Usually on the weekends.
tours?
Yeah, we do on the weekends.
Yeah.
And what we try to do with the property tours is give them all the information right up front. So we do the financials for them. We pick, here's the out of maybe 20 or 30 properties in the market. Here's probably the best 5 ones on paper that look like the best investment. Let's go check them out and see what they look like on the inside. Because typically you want to see, is it going to conform to bylaws? Or can you actually make your plan work within these homes? 9 times out of 10, you have to do some sort of change. Like, gone are the days that you can purchase a property and you have a single family home and just rent that out. You're probably gonna have
that's old school. That's old school.
I wish we could still do that. Unfortunately, we can't. And so understanding those bylaws and what they need to do to it. And when you go into the home, you could see, hey, is my ceiling height going to be right? Is my square footage going to be right? Do I have the proper egress? Or what is it going to cost me to get there within this home? So that's what the property tour looks like. But yeah, we try to have a diverse amount of meetups and a diverse amount of opportunities for everybody to network and come together as well.
And how would you describe the active and passive investors? Because some people would say, well, it's all passive investing. So how do you
and I'd say that's a mix, because there's pros and cons that come with each. A true active investor is someone who does have the time and wants to get in themselves and get their
hands dirty.
You
gotta get your hands dirty for sure.
Yeah, they're gonna have some sweat equity in there, but they're gonna keep 100% of the asset. They're gonna have all those returns themselves, but they have to understand what they're getting in there. You have to look at not just your return on investment, but your return on time, because you're gonna be putting a lot of time and effort into that as well. The passive investor who lets everyone else do it, you're still gonna get a very good return, but it's more like the stock market. So it's, what does someone want in terms of a return? And you're probably going to get a much higher return on the equity side if you're going to do it all yourself. But then how much can you do yourself in terms of your time? You may have a full-time job. The way I started out was most of my the people that I worked with, either if they invested with me or they wanted to do themselves, were ex-work colleagues. And if they came in there, were ex-work colleagues that are
yeah. That's awesome.
And a lot of them they're soccer moms, soccer dads, and they're always out and they have their steady income. They just want to make their investments work better for them. And that's what real estate investment was for me when I was first researching it. Is I knew I was comfortable in my job. I always had great jobs. I made a pretty steady income. But if I'm going out and getting mutual funds and getting 6, 7, 8%, I was looking for something more than that. And real estate investment definitely provides that. And then once you educate them on that, they're like, hey, there's better options out there than what society tells you for investing, as you and I both know.
Of
And it's
course.
and just getting the education around that, and hopefully kind of peeking behind the curtain, you see there's so much more out there, and just hopefully providing the option for them to choose themselves. And you're going to get a better return if you're going to do it actively or passively. And then it depends on the individual and how much time and interest they have to do it themselves, or still get a good return with somebody else.
So let me get this straight. A passive investor would be somebody who doesn't really have the time, who has a job, they're happy with their job, they have kids at home potentially, they've got a family life, but they want to invest in real estate and they become passive investors.
Correct. And they're investing very similarly with the stock market. So they're going to invest, put their funds in there. Everything's contractually obligated in terms of collateral, what we use, and in terms of their security with a lawyer. And then basically they're treating it like a stock, and they have updates very similar to they would with stocks and other types of investments, but they're
Mhm.
not actively involved in managing.
That sounds really good. That sounds really good. And the active investor, what does the active investor look like?
And the active investor, on the other hand, is one that is going to get all that in terms of the rewards on it, but they're going to get much more because they have equity invested in it as well. They have 100% equity, where they're giving up some of that equity on the other side because someone else is managing an asset for them. But an active investor is also not necessarily going to be, if they're working with us, we're always going to tell them where to go and who they have to call to avoid that, hey, for sale sign, big hurdle comes and they get a reverse investment. But they're still going to have to work with contractors. They're going to have to work with all the lawyers, getting everything done on the property, all the financials on the property. We will guide them along that way. We'll always hold their hand along that way, but they're doing the work. They're doing the work. They're
Yeah.
doing the work associated to it. They have to go out to the property or have a representative go out to the property, manage those renovations, manage the property managers, and everything around that. They're still doing all that management rather than relying on an asset manager or a real
And
estate
and,
investor.
and they'll most likely learn. If they don't know it already, they'll learn along the way. And hopefully that's beneficial because
And
there's
that's a
always a
very
few
good point. We
mistakes.
have some people that start out as passive investors, but
Oh
then
yeah.
and then really look at this and go, "Hey, this is something that is actually going to produce. Is it something I want to learn and get my hands actually a little bit more dirty on?" And they
Yeah.
become active investors down the road.
Cool. Yeah, there's so many ways of going about it. I think that's what I like about it. It's also very creative as well. There's always a niche, and there's always something that needs to be solved. I like that. So let me see now. So you got the club, the brokerage as well. That's not combined at all? You say?
It's not combined. No, we have sometimes we have our meetups in there. We just
Yep.
opened up a new event space within the brokerage, but it's called Keller Williams Legacies, and here in Vaughan. And we would love to say that Vaughan is the best place to invest, but unfortunately, it's not. Um,
What's the best place to invest in? I thought Vaughan was a great place. I mean,
Sure, it leads into the next question, and things have changed quite dramatically since COVID. So, the best place to invest used to be right in our own backyard, and it was basically within the GTA was a fantastic place to
yeah,
invest, even in the 80s when interest rates were extremely high. And people continued to invest in their own backyard. But as time goes on, and you have purchase prices going up and rents not going up as fast as purchase prices, that gap between or the ratio between rents and purchase price it just got harder and harder in our own backyard. So you get pushed out in the outskirts. So then basically outside the GTA became the best. You're going to get much more bang for your buck if you go into, for example, Durham region. That's being pushed out now to
yep.
Peterborough, further out. And on the other side, it was Hamilton, but Hamilton still you can invest in, but you're being pushed out to Brantford, to St. Catharines, to Niagara region, and some even go further out into London, into Chatham, and that's going to continue.
Yeah.
We're
There's always an
basically
expansion.
continue to see that. And I think because of COVID, and I don't want to get political in the podcast, but also some limitations that we have within investing in Ontario with the LTB and the current government in place, a lot of people are going cross border as well.
Yeah.
And I see,
Yeah.
depending on your goals, what you're looking at, we're probably going to get a little more appreciation here, but you may get more cash from those states. So we have seen people go in the states too.
I like to invest locally. I think there's always nuggets in our own backyard. But true, you got to be more creative and expand a bit more. Can't be
Mhm.
just next door. And I try to also avoid. I think it's also very important to believe that the grass is always greener on the other side. There's always better out there, and they start looking elsewhere to places where they may not know as well. But just to say about Vaughan, I do remember when Vaughan was just a field. Just- like there was a field and there was Canada's Wonderland in that field. That was Vaughan when I was in Toronto growing up.
That was
That was
my,
it.
for sure, me too as well. I grew up in Mississauga, but
Yeah.
I moved here a long time ago, a good 15 years ago. And I had farms all around me when I moved here. And it's the growth that we've seen is tremendous within Vaughan for sure.
Amazing, amazing.
Yeah.
It's just not the same place. Okay, so you seem like you've got your finger on lots of real estate things, like the investing, the as a realtor. Where do you see this going in the next couple of years or so? I mean, 2024, 2023 out of the way, that's fine. How do you see this going with the housing crisis, with with the high interest rate that's going on? What's your take on the next couple of years? Is it the best time to invest, or should we be investing now, or waiting until now's the best time to go into the market? How do you see this going?
Good question. And again, my answer is going to be opinion. So it's going to be basically, it's hard right now. We're still in unprecedented times. There, we haven't experienced the COVID like this before in our lifetime.
Yeah.
And in terms of what we faced with COVID and everyone holding back on spending, and then once we got something let out, we had a lot of disposable income, and then went out and spent it, and it drove everything up for a big correction right after. So
Yes.
basically working with a pretty big roller coaster over the last few years. And
This is like
again,
the hangover. This is like the hangover, all that spending.
exactly, yeah. And the government in place obviously has to react to that. And now we've reacted with all these rate hikes, making it extremely difficult. So right now it is extremely difficult to get the cash flow that you want. And I always advise investors, like, the prices have come down. But
Mhm.
if you look at the trend over the last 20, 30, 40 years, the trend line is still there. You just have to ride the short-term roller coaster that may be what we're facing in right now. So I don't think we're out of the water, but when you learn to invest, you learn to understand patterns. And you need to look at patterns, and what has the pattern been over your lifetime, or over several lifetimes for that matter, or even for a shorter time frame as well. And that pattern, everything that we have within the short and long-term economics, and I'm a very short and long-term view. So I'm very short-term cautious on real estate, but long-term optimistic.
Mhm.
Because I look at the long-term economics, like population trends and people coming into the city, and the need for housing, and the need for both rents and the need for people to buy new homes. I see that. And that is going to trump the short-term things like interest rates, like
Yes.
inflation, like employment, things like that are short-term things that unfortunately can change the market on a spin of a dime. Once interest rate announcements come out, the market could change almost immediately when that is
True.
done. But to answer your question, I think we're probably in this for at least the next year or so. We may see one rate hike, or sorry, one rate cut this year. I think they're expecting that in June, potentially. Even if they don't do that, we have to wait for inflation to taper down a little bit before that can happen. We still could be in this for at least the next year. I predict probably the next year to 2 years. But to get back to interest rates being what they were over the last decade is difficult, for sure.
That'll be very challenging. Yeah, that'll be definitely challenging. Yeah, there's it seems as if it's all cyclical as well. I mean, there's every 10 or so years, or even cyclical could be 18 years as well, where we have the ups and the downs. It's all part of investing. It's all part of the economy. You just got to kind of ride with the wave. But it comes down to, is now the best time to buy?
Yeah, and right now, I'd say over the next year, I still predict that we probably have one of the best buying times we've had over since the last, I'd say, close to a decade now, probably pre-COVID.
Yeah, the prices
And
have gone down a lot.
yeah, prices have come down. Like, I'd say we're even over the last 2 years, but if you look at the last 10 years, we're still trending up. So people get very fearful because the last 2 years have been a roller coaster, and I can't blame them.
Mhm.
You're going in there, you still don't know if prices are going to continue to fall. I think we probably bottomed out for the near part, and we are looking at an upward trajectory. But when that happens, I don't know. So
Yeah.
I'm quite
I
comfortable
mean,
in terms of, hey, we have good opportunities ahead, but will interest rates first taper down and still make that current property that advantageous to you right now, where later on the interest rate still could be the same, or even if the interest rates drop, the home prices could go up. So you always still look at buying real estate like a business. And I was still buying real estate in 2017 when they had the fair housing taxes
mm,
come out, and all those new legislations put in by the government. you look at it like a business. I'm buying a business. If I have predictable and projectable revenue coming in and predictable and projectable ROI, then those are pretty much constant. When I get a mortgage, that's not changing regardless of what's happening in the market. So I need to shelter myself and having that business sustain itself for the long term. And real estate is basically, these peaks and valleys are going to come. It's basically sheltering yourself and having a business that can sustain that, so you can choose when you need to either exit or refinance or pivot from that asset.
Very well put. It is a business, exactly. And I've heard some people actually waiting for 2019 prices to come back.
And
I don't think it's
the thing that there's cliches in real estate. We've heard
Yeah.
this one is you basically don't want to try to time the market. You could time the market. If you look back at history and look back at patterns, the biggest recession we had was 1989-90, when we had a huge run up in the late 80s. And it took the market 6 years to go down, another 6 years to go up. And we basically did a study on that. And if you bought at the height of the market, when prices were the highest in 1989-90, and you waited till the market to recover, who would have made more on their returns? Would it be the person that waited and timed it perfectly 6 years later and they bought at the lowest part of the market? But then they lost basically all those years of someone else paying off your mortgage and having a lower debt service on that. You're going to make higher absolute dollars by buying higher, but make sure you shelter yourself from that. The first thing we look at in any purchase that we have is risk mitigation. I want to make sure my money is number one safe, and my rent or my returns are going to be predictable and projectable. And if I can have that, then I'm choosing to maybe potentially buy that now, because if I wait, let's say a year or two, what can happen with the other variables? It's not just about the purchase price. It's not just about the interest rate. It's about all those variables in place that I don't have control over. So I look at, again, I go back to, this is a business decision. You're always trying to some aspect time the market, but you don't want to time the market to not take action as well. And just
for sure.
And
sit on the sidelines, because even sitting on the sidelines is a decision. Not taking action is a decision.
Absolutely.
Yeah, definitely. I like what you're saying. So number one is risk mitigation. What's number two? What's in that second priority?
The first one is risk mitigation for sure. And number two is basically you want to have an asset that's going to give you a return. So it comes down to mitigating your risk, but then projecting a return that's going to give you something that is a good return on the investment that you have and the time that you're going to be putting in, depending on what type of investor you are. But that's, I'd say, number two. And that's why when we go through everything that we purchase, there is financials, there's everything in place that we know our numbers before we even put that offer on that home. So we want to first mitigate our risk, know we have the rent and that buffer coming in case of interest rate hikes coming in the future, but also knowing that, hey, we're going to have a return on the end of this too.
Cool. Okay. So number one is risk mitigation. Number two is the good return, which depends on certain people. A good return could be 6%, could be 10. And what's the third, number three?
The third one is probably having the systems in place. The third thing is you look at is, are you going to fall into hot water by not having the team in place to actually manage this process, be it yourself, be it an extended team, be it someone else doing it for you. You need to have the right people in place that they know exactly what to do with that asset. They have the financial acumen, they have the business acumen to make the decisions that you need on that asset and take action and actually manage that asset for you, or if you're doing it yourself. So I think it comes down to, number one is, you want to mitigate your risk. Number two is you want to have a high projected return, but then along the way, you got to be able to run this business. And then how are you going to run that business? And that's basically getting in that either yourself or having the right team in place to run that business.
At what point is the capital rotated or refinanced?
As soon as you can, basically. I never like to have sitting money. And you just look at how the banks invest, and that banks invest your money. If you want to invest your money or look to lend your money out, do it the same way the banks do.
Tell us more.
Have the collateral. Like, the banks understand real estate, and they when can you launch a business and go to a bank and the bank's going to come and tell you, I'm going to give you 80% of your upfront costs to launch your business. Typically, you're going to get 50, no more than 50. But they understand real estate and the last 100 or 200 or even lifetimes within real estate. And the banks are willing to put up 80% of the capital for that asset, and you're only putting up 20. So over the life of that asset, they only need to have 20% of that. And most residential clients or people that don't understand real estate investment, they want to pay off that mortgage as quick as possible. And I'm a big believer in understanding the largest asset that you have and also utilizing that largest asset that you have to potentially further yourself as well. So we never want to have sitting funds. Like, if you have sitting funds, you're basically saving. And if you're saving, what's happening to your funds? They're basically getting lower and lower and lower
They're getting
because
dwindling away with inflation.
with inflation,
Yeah.
exactly. So $1 today is probably going to worth 30 cents in years from now. So I want to utilize that dollar today when it has the purchasing power. And I basically want to refinance. The bank always keeps their 20% in there, but then I'm utilizing those funds and putting that into a new asset or a new investment.
I used to go to Canada's Wonderland for $50. I'd have a whole day at $50. It'd be
Mhm.
fine.
I
That's
agree.
long gone, long gone. 50 was a lot. It was huge. It was like a red bill. Tell me more. I love what you're saying, Martin. Tell me more
Thank you.
about cash flow. What's your opinion on cash flow? Because a lot of people, it's all about the cash flow, and it's very important to have a bit of cash flow. But what's your take on that?
Yeah, when I started out, it was all about cash flow. Most new investors, if it doesn't cash flow, then forget it.
Yep.
And for the most part, that's true. You don't want to have a business that's gonna not sustain itself. But
Of
also,
course.
I have a business background. I look at it doesn't have to cash flow from day one for me. I look at my usually payback when I launched a product when I was in the marketing field. Sometimes it was 4 years because you have to
Mm.
invest for 4 years before you have a good payback on that. And I'm willing to do that if I have the funds to back that up. So basically, I always want to have enough cash flow to whether it's, let's say, 2, 3, or 4 interest rate hikes over the course of a year. And I know that as rents go up, my cash flow just gets better and better and better. And I have a good tail on my expenses because my largest expense is typically my mortgage, which typically goes down over time. So I know I have a good upside potential for cash flow as I own the asset. But let's say the times we're in right now, higher interest rates, have we bottomed out? So I think interest rates are likely going to come down before
Mhm.
they go up again. They still may go up. We still may have interest rate hikes, but for the foreseeable future, long term, we see that probably tapering down as the economy changes. So I take that in the back of my head, going, look, if I have a really good investment here, that let's say I have a negative cash flow of $100, for example,
Yep.
and this is what I would say to a client: I said a negative cash flow of $100, and I have the bank purchasing all these 80% of the asset for me. If I'm spending, let's say, $700,000 on this asset and I have a negative cash flow of $100, that's $1,200 in the year. So let's say I
Mhm.
have to hold this position for 2 or 3 years at
Okay.
12 or $2,400. Is that still a good investment for you on top of your down payment that you put in for an extra $2,400 that you're going to have a negative cash flow for the next 2 years, but you're buying at today's prices, not prices from 2 years from now? Then that's a decision you want to make, and you have to have an open conversation with either yourself or the investor and saying, where do I think the market's going to be in 2 years or 3 years? And that's why it's the same thing of trying to time the market. I don't know what the answer is, but I know I have a business here that is going to be likely profitable in the next year or so. And $2,400 is not a lot of money for me to have in terms of negative cash flow, unless interest rates go up. So there is some sort of risk that you have on that. But it's the same thing of trying to time purchase prices. Hey, I'm not going to buy this property because 6 months from now, I may have a better property. You may find a better property, but markets may have moved, and now that same property could be $25,000 more. Who knows? So you're always trying to time the market, but looking at the information that you have in there, I may be okay with a negative cash flow for a short amount of time because of the state of the market that we're in.
What about those who want to live off cash flow? What do you tell them?
And that goes back to we always start working with anybody of what is your goals? And it could be cash flow or it could be long-term wealth.
Yeah.
If you're looking at cash flow or to make a quick buck, then there's flipping, there's wholesaling, there's other ways that you can make your quick active income. I classify me and my income that coming in as active income and passive income. My
Mhm.
active income is what I need for me to put bread on the table and actually feed my family and live on. Passive income is my long-term wealth generation. So if my active income is coming in only from the cash flow from my real estate, I need to have other sources because cash flow is probably not sustainable unless you have a large amount of properties that you can live off of it. So don't look at cash flow as something that you're going to live off of it. I typically look at if someone's going to look at to invest in real estate, don't go and quit your job. Still have a steady source of income until you can build that up. And luckily I did that, and I went out and bought many, many properties up front that I could do that later on, but it's not something you could do up front. But if you want to live off that cash flow, then yeah, for sure. You can start out that way and find investments, for example, student housing, lodging. You can go to the US that has higher cash flows, or you can look at flipping. Those are other ways that you could look at to get immediate cash, but it depends on the investor and what their needs are. But there's opportunities out there for long-term wealth or for cash flow, but cash flow is a little bit harder in today's market, unfortunately.
Yeah. I love talking with you because you got a quite electric vocabulary on talking about investments from different angles. I
Thank
really
you.
really
Thank you.
appreciate that, and it's also a different perspective as well. It's most people don't speak that way because most people love the cash flow and they don't think about. But living off the cash flow, I think, is dangerous because you need the cash flow for example, expenditures or even taxes that we're noticing at the moment. And what just to wrap up this conversation, any good books that you suggest?
If you're first starting out, I'd say this is the classic Rich Dad Poor Dad. And you
Yeah,
have to, the number one thing that I wish I had when I first started out is changing my mindset up here. It took me 20 years for me to undo kind of what society has taught me to do. And how can I learn off of that? And people probably heard of Rich Dad Poor Dad, but until they actually sit down and read it, I know, like probably yourself and within our group of real estate investors,
yeah.
they haven't read it just once. They probably read it multiple
You
times.
got that's right. That's right. I think as I age, I realize that you can read things once, but you got to reread it to really understand it deeply and identify with it and experience it. Because we can say one thing, but if we're constantly doing something else, we're not getting the message. We to read it, understand it, so it changes our behavior, it changes our way of thinking, but ultimately it changes our behavior and our actions as well.
I agree. And I think the tools you can always get in terms of the internet, in terms of educating yourself, I think the most reading that I like is what is going to change my action taking up here in my own mind. And
Mm.
Robert Kiyosaki does a brilliant job in his first book, which is Rich Dad Poor Dad, in his second book, The Cash Flow Quadrant, even better
Oh
in
yeah,
terms of understanding exactly where you are and your investing mindset. Are you an employee working for somebody else? Are you a business owner? Are you an investor? Or when you quit your job, are you just creating another job for yourself?
no, and
And
you could be in there's no wrong in being in one category, but at least knowing that there are other categories and at least doing all categories at least in order to get something time, like getting a wide range of income is
I
important.
agree. And then seeing exactly what each category provides for you and what options are in each of those categories, and then ultimately make a decision with information that you have rather with information that you think that you have. And that's the hardest thing I find. Like real estate investment, no matter if you're an investor or not, you have an opinion on it. And if you've
Yeah,
been like, for example, take when we first started this call, you had your friend that is never going to touch real estate again because of the experience that they had. But again, I look at back, you're only going to have the experience you have. You may not have the full amount of the information. I always look for someone to try to get all that information up front prior to making a decision, because most people that I find with real estate investment, even the ones that are highly educated, don't understand real estate investment until they actually dig into it and they
yeah,
understand it from a maybe a 30,000 point view. So get the information first before making a decision on it, or otherwise that's fine. You can move away and not invest. But I know I can't change someone's mind until they actually want to learn
yeah.
themselves.
So I definitely agree with you what you're saying. We're in an age where abundance of information, abundance of knowledge is there. And often what I find is people lack clarity on decision exactly what they want. So I'm sure this is where the group and the support comes in. Vaughn Investors Club. And when do you meet? Once a month? Where do you meet and what time?
It's usually the third Wednesday of every month, and it's
Okay.
usually from 6:30 to 9. And we have it here. It's in Vaughan that we run it within our brokerage. And you hit it on the head. You don't want to make these decisions on an island and doing it yourself, and that's
Yeah.
why having the group around you gives you that assurance that hey, other people are doing this. Other people are looking at the same information I have, and even if they're looking at it a little bit differently, you can look at what others are doing and make decisions based on what others that are doing that are much more advanced than you or in the same boat that you are. And it just gives you that comfort that hey, you're making the right decision rather than are you making the wrong decision? Are you looking at something a little bit differently? And you second guess yourself, and it's human nature to second guess yourself.
For sure, for sure.
And you
I've
need
got
to have
a
that assurance.
I've got a friend who climbed a mountain, and he said the number one thing that helped him on that journey of climbing the mountain, that's just an analogy, was support. Without support, he wouldn't have reached it. So
Couldn't agree
support
more.
is so important. Thank you, my friend, for taking the time. That was great.
Thank you. Always
Uh,
great chatting with you, Renee.
always
And
always great. Like
I always enjoy our
hours
conversations.
hours go by. So fast, so fast. So thanks for the time, and we'll chat again.
I appreciate it. Thank you.
Thanks.
Thanks a lot, Renee.
Bye-bye.
Bye.